Good morning, everyone. We are ready to begin. You are at the House Study Committee on Reinsurance for Essential Industries. We appreciate everyone being here this morning. We look to receive some great information and follow on this project. At this time, I would like to ask Chairman Noel Williams if he would open us in prayer.
Thank you, Madam Chairman. Let us pray. Dear Lord, we thank you for this day and we thank you for your traveling mercies. We thank you for this great state of Georgia and we thank you for all the members of this committee. Please help us to do the will of the people, dear Lord, and to investigate and do what we can to help the people of Georgia. Please be with us, lead us, guide us, and direct us. We pray all these things in Jesus' name. Amen.
Thank you. We will begin by introducing members of the committee. If we will just start over here with Demetrius, introduce yourself and what you do and how you're involved in this. Thank you.
Good morning. Oh, 18. Okay. Good morning, everyone. I am Representative Demetrius Douglas and I serve in District 78. And I just wanted to thank everybody for showing up and coming out. This is a very important initiative to all of us, and especially for our state. And that's it so far. That's all I got.
Thank you. And I'm Representative Darlene Taylor. I represent District 173 in rural South Georgia. I live in Thomasville, and I serve on the Insurance Committee, and that's an interest of me when we have reinsurance.
Good morning, everyone. I'm Noel Williams. I'm in House District 148, which is down in Cordele, which is South Central Georgia. I've been in the insurance business since I graduated from the University of Georgia, so it's definitely of interest to me. I serve on the Insurance Committee as well as several other committees. But thank you for your time and look forward to the meetings today.
Thank you, Madam Chair. Good morning, everyone. I'm Carolyn Hughley. I'm privileged to represent House District 141, and I'm the minority leader of the Georgia House. And I've been an insurance agent for about 35 years now.
Good morning, everyone. My name is Bryce Rawson. I'm the Director of Legislative Affairs for the Georgia Insurance Commissioner's Office under the leadership of Commissioner John King. I'm excited to learn just a little bit more about the reinsurance industry and broaden everyone's knowledge here. I've worked with most everyone in this room in some form or fashion over the last several years, and I'm excited to see what we can do for the people and businesses of Georgia.
Okay, we also have Zooming into the meeting, Representative Gamble. Let's see if we can get him.
Hey, good morning. Can you hear me?
Yes, we can hear you.
Awesome. Thank you, Chairman. I'm glad to be with you today. Matthew Gamble, State House District 15, Cartersville, Georgia. I serve on the Insurance Committee and am a licensed insurance agent, although on the life and health side, I don't sell insurance right now, but very interested in this topic. Have worked on a few bills that have touched in and around the issue of reinsurance, and so I'm excited to participate and learn more. So thank you for this opportunity.
Thank you. Next, we will begin with I want to thank all of our people that are going to share with us today and speak on these important issues. And if we could get you to come up to if you would prefer, let me know if you'd rather be at the table or at the podium. Jason Rudis, are you here? Thank you. Would you like to go to the podium? And as we get started, today's meeting is designed to be an open dialogue between committee members and the presenters on very serious issues. Please ask any questions that come to mind during the presentations and the testimonials. It's important that we discuss this. It's kind of a deep but very interesting issue. So please feel free, members of the committee, to voice your concerns and your appreciations for what all it is. So if you would. Thank you. If you'd introduce yourself and tell us a little bit about your background.
Sure. Is this on? Yeah. Thank you, Madam Chair and distinguished members of the committee. My name is Jason Rudis. I work for the Reinsurance Association of America. Before I started at the RAA, I worked for CNA Insurance, which is a commercial lines specialty insurer based out of Chicago. I still live in Chicago. Fortunately and unfortunately sometimes, but before that, I was legislative staffer for the Illinois House of Representatives. So I have a little bit of background, and this brings back a lot of memories. So it's great to be back here and with you all. So that's a little bit about me. The Reinsurance Association of America has members from all over the world, Bermuda, Europe, even Japan, the U.S., and so a broad range. My goal today is to outline give a little bit of a reinsurance background primer, and then also go through, the RAA has the ability to do market data analytics and go through how reinsurance is used in Georgia specifically. So that'll be the second half of my presentation after we do a little bit of a reinsurance primer. So my main goal is not to put anybody to sleep, because reinsurance can get kind of boring pretty quick. So hopefully we avoid that. So the easiest way to think about reinsurance is that it's insurance for insurance companies. So reinsurance is B2B, it's business to business. Reinsurance contracts are between the insurer and the reinsurance company. Am I not speaking loud enough? Oh, there we go. Thank you. So reinsurance is between the insurance company and the reinsurer. It does not interface with the policy holder. How does risk transfer work with reinsurance? The policyholder cedes or transfers risk and pays premium to the insurer. The insurer assumes the risk, and then the insurer cedes risk and pays premiums to the reinsurers. The reinsurers assume that risk, and then there's even another layer where the reinsurer can cede risk to a retrocessionaire, and the retrocessionaire assumes the risk. The retrocessionaire is a fancy name for other reinsurers. So those are kind of all the layers of how risk is shared in the reinsurance process. What kinds of reinsurance are there? There's treaty reinsurance. It covers classes or entire books of business that an insurer would write. So think national insurance carrier, home and auto book of business. The reinsurer accepts the entire book. There's no ability to accept or reject certain policies and get written within the portfolio. So the reinsurer accepts a portion of the price the insurer charges as its premium. So think of this book of home and auto nationally by a national carrier. Reinsurer assumes 20% of the risk. Then the insurer pays the reinsurer 20% of the premiums. That's a general way that treaty insurance operates. There's also facultative reinsurance. These agreements involved an individual insurance policy where the insurer seeks reinsurance for a specific risk, allowing for tailored coverage and increased capacity. So think of this, the example would be an insurer might use facultative reinsurance for a large commercial real estate policy exceeding their retention limit. Think of an NFL stadium. Nobody wants that entire risk, I promise you that, or has the capital to do it. So the next slides, I'll kind of demonstrate what I mean by that. But another example of facultative can be cover risks excluded in treaty agreements or to accommodate policies not typically written. So a homeowner in that national homeowners book of home and auto might want a commercial auto coverage for commercial auto vehicle. They have an ice cream truck, or they have some sort of side hustle that they want a commercial auto vehicle covered. So commercial auto is a line that's excluded from the treaty agreement. So a facultative agreement would come in and be used in this instance. Covered a lot so far. Or do you want me to go over anything else, or I'll keep going? So,
does anyone have a specific question? It is very deep and very interesting, but please continue.
Okay. All right. I'll keep stopping or just interrupt me but I'll keep going. Again, and this is high level, like we're just skimming the surface. When they brought me on board, they put me in a room for a week and they gave me food and water every once in a while, but we could cover a lot of ground, but I'm just doing the bare basics today. So, what's the advantage of reinsurance for insurers? It's capacity. Remember that insurers are required to set aside collateral that's proportionate to the amount of insurance they write. So that limits how much new policies they can write because they have only so much capacity. So a reinsurer can come in and offer coverage that will free up collateral by layering coverage above the insurer's limit. Pretend there's a $10 million claim for an NFL stadium, and the insurer, if they're properly reinsured, might only pay $2 million. Well, how does that work? Let's say the insurer's retention or limits on how much they would pay for an event is $2 million. So their retention is $2 million. Then they go to market and they find a reinsurer willing to write the first layer. The first layer is $3 million. It's a $3 million layer in excess of 2 million. The excess is just excess of the 2 million there at the base. So that's what that means. So you've got the base layer. Then you've got another reinsurer that comes in and does another layer. And it's a $5 million layer in excess of the 5 million below it, right? Because you got the 2 million in the gray and the 3 million in the blue. So, and then there's a final layer in the green where it's a $5 million layer in excess of 10. And again, the excess of 10 is all the layers below it. So when properly reinsured, this NFL stadium would only pay $2 million for a $10 million claim. So it frees up capacity because they have this coverage above their limits. It frees up capacity for that insurer who was on that policy to go write new business.
And you do have a question, Representative.
So as you're describing these layers, and I'm assuming there are different players at each layer. It's not the same player taking different levels. So what type is it that the different players have different capacity, or who's first? If something happens, who's first, who's second? Just depending on when they come in, or how does that work?
Excellent question. It depends. So that's called a reinsurance tower, and who pays first is at the bottom. And so the blue layer, the first layer, we call that oftentimes the working layer. That's always the more expensive layer because if there's an event, it's the first one that's going to get triggered. It's the first one. So if let's say there was only a $5 million event, think of the NFL stadium and part of it collapsing, some sort of thing collapsing on it, and it's only 5 million, then the third layer would never have been triggered, and that reinsurer doesn't have to pay anything because the claim was only $5 million. Does that help answer your question? Okay. And they bid them to market, and it's really who has the appetite. Some reinsurers are hungry for that bottom layer, and some like to play in the upper layers and don't want to take the risk or deal with it. So it's really about reinsurer appetite.
I have a question. Just in general, I think it will help explain it also. Sometimes when you might have a policy that's Allstate may be the front paper, but they have other carriers that own a piece of it. So like when you have hurricane damage, your policy will be paying, but it could be other carriers in the back that are helping backfill. Does that kind of explain how it works also? It's not on one event. It would be on a whole block of business.
Yeah. So in the hurricane example, Allstate, there are triggers. So it would be one, it has to be a named storm or named storm. And then also it would depend on Allstate's retention or where the trigger is. Let's just stick with this example. I know the numbers would be small for a hurricane in this example, but yeah, I mean, Allstate, let's just assume it's a major hurricane. Allstate would reach its retention, no doubt. and then the reinsurers coverage would trigger, and they would pay the money to Allstate, and Allstate would pay claims, and then Allstate would if there's litigation or anything, could subrogate and bring that money back through and give it back to the reinsurers. But for the most part, the interface, you're right, the interface is Allstate, and the reinsurers, there's no, like I said in the beginning, there's no interfacing between the reinsurer and the policyholder. It's reinsurer to insurer and vice versa.
Representative Hughley?
So can you clarify, in this tower, who's gonna make the money? Everybody's gonna make a piece of it, right? The one at the very top is probably the one that's the safest one. So how are each part of this tower making their money is the question.
Well, it depends on the size of the claim, right? Let's just say it's a $10 million claim. Nobody makes money because they're paying out the claim, and they have to reset the tower because they just paid out all the money. If it's a $5 million event, then yeah, the green would make money in that circumstance. If there's no events the whole year, they would make money. They would make a profit that year.
And their premium or their contribution into it would have been less because their risk is less.
Correct.
Okay, thank you.
Yep. Another advantage for insurers to use reinsurance is stability. Insurance company policyholders and stockholders like to be identified with a stable and well-managed company. Planning for long-term growth and development requires a more stable environment. So what reinsurance does is think of, the quarterly profits and losses from a insurance company, and how it fluctuates up and down depending on events or inflation or outcomes or claims. What reinsurance does is it flattens that line, that results line for insurers, so that there's less volatility. So if you have a lot of claims or an event one year, you're going to have a massive amount of losses. But if you have reinsurance, it's going to stay. It's not going to shoot up. The reinsurers are going to pay for those losses, and it's going to stabilize, and you're going to look like a more stable company. It stabilizes insurers, which is good for growth and for keeping prices stable for the policyholders. All right. I'm about to jump into the Georgia Insurance Market Analytics presentation. So I'll go ahead and do that if there's no further questions.
Please go forward.
Okay. All right. This is a chart showing billion-dollar events, weather events, for using NOAA data, and the frequency. I think what's going on here is obvious, and it's the frequency of events that are picking up. That's easy to see, and why insurance might be going up in pricing. You look at the frequency and severity of these storms over the years. This chart shows the Georgia specific information. I think it's clear that Georgia's had an uptick in the last, I don't know, 4 to 5 years of frequency of severe convective storms and cyclone activity. So there is something there in terms of weather events. So the takeaway from this slide is, let me make sure. Yeah, so the takeaway from this slide is that going back to 1980, when we look at the data, in terms of the cost for the state of Georgia in terms of claims during these billion-dollar events, the last 3 years, going back to 1980, over 31.5% of the costs have been associated with the last 3 years, going back to 1980. So that's a significant portion of the cost of these claims. And I think it's obvious why. It's because there's been increased activity with severe convective storms and hurricane and cyclone activity. So interesting to see kind of how much it costs and when for the state of Georgia over time.
I have a quick question on that. Do you think it's because our technology is so much better now than what it was before? I ran into a guy down in Brooks County about a month ago, and he and I were talking, and he told me that there was a hurricane that came through back in the 60s and that basically wiped his family's farm out. You know, and we thought this was the first hurricane that ever came through Georgia. I mean, I'm 53 years old. I've never heard of hurricanes coming through Georgia, and I'm 100 miles north of the Florida line. And he told me, he said, buddy, let me tell you, he said, I was the biggest farmer down here. And he said, it wiped me out. He said, there's no such thing as any of this. So, you know, we talk about this and it sounds great. It said, oh, well, it's climate change, this, that, and the other. But I'm just wondering if our technology obviously is so much better and there's so much more data, because I'd never heard of a storm, you know, and why would I? But, you know, and then everyone says, oh, this is the first time we've ever had a hurricane. And then I'm talking to this gentleman over here. He's like, no, son, he said, it's wiped me out back in the 60s. So that was a question, or more like a point, or is it not true? Maybe is what I should phrase.
I think you raise a good question. I'm not qualified to although we have we also have broker members. So I was at the National Association of Insurance Commissioners meeting last week, and we had the head of Gallagher, their chief weather scientist there, and he would be great for that question right now. But I think he'd probably agree with you to an extent, but I'm not qualified to take that one, but I probably agree too, but I can't point to anything to prove that, but you're probably right.
Representative Hughley, you have a question?
Yes, my question is, you showing us the last 3 years, and Madam Chair, I hope we get this information because I can't see it all that clearly. But what is the outlook going forward? Because somebody has to know what they're expecting in the next several years in order to price these products. So what is that outlook?
That's a great question. And insurers work with modeling companies who they take all the data that's up there and forecast ahead. So there are many modeling companies that insurers use to forecast what's ahead based on prior data. So there's the modeling companies are the ones looking into the future of what could happen. But the only way to look forward is to look in the past at what's happened prior to today.
Thank you.
All right. Let's see. Yeah, so this is just, again, looking at what kind of event is driving the catastrophes. And this is interesting because while severe convective storms are certainly the more frequent peril occurring in Georgia, tropical cyclones being second, tropical cyclones in terms of total costs and damage far outweigh the severe storms. So that's your culprit. What's driving up the damage and costs? It's tropical cyclones in the state for the state of Georgia. Oops. Okay. So I'm going to jump into all of these lines, but this is a visual representation of what lines of business use reinsurance in Georgia in this conversation. So the top line are insurers who work with the federal crop insurance program, and how much reinsurance, how much they keep and how much they reinsure. And the point here is to demonstrate just how much the federal crop insurance program seeds its business, and it's significant. So if the insurers insuring crops in Georgia reinsure 55% of their business. And just to be clear, those folks who are reinsuring all of that business is done not in the private market. That's the federal government. The federal government is reinsuring those crops. So that 55% isn't us, it's the federal government. The next line is private crop. I'll get into it, but there's like hardly any private crop sold in Georgia. It's tiny. It's tiny. So I mean, to whatever issue we're looking at, it's the private crop market is just minuscule compared to the federal crop insurance program, and I'll get into those numbers. For comparison's sake, the next line is commercial multi-peril non-liability. So this is just any sort of business excluding liability. So it could even be a farm where, excluding if a tractor rolled over, but it's insuring all the equipment and land and so on, but no liability. They only reinsure 14%. Homeowners multi-peril. So that's the next one. That's just, all the writers, the top, who have the market of Georgia, represented by the trades in this room, are how much reinsurance do they use? And it's not a surprise. It's a very standard number. They reinsure 8% of their business. So it's very, very normal, very small amount. And then again, the last one is just commercial multi-peril with liability. And again, it's a small number again. So we put those in there just for comparison's sake, up to when you look at the federal crop insurance program, just to kind of compare, what does this look like against the backdrop of other lines of insurance? Any questions on that?
I have a question. I might be getting ahead of myself, but in looking at premiums, when you are paying the different levels of reinsurance and the prices to the consumers, for example, they had the fires in California, and that was devastating. Is it going to affect the rates in Georgia, even if it's in a second tier, because reinsurers they lost money, the carriers lost money, and eventually, does that affect other states, even though it was a loss in another area? The same thing with hurricanes. It may have hit Florida. Is it going to affect homeowners rates or fire rates in other places?
Good question. So I'll only speak from the reinsurance perspective, not the primary carrier, but so reinsurance is written, again, think of a national carrier who has home and auto. The reinsurer reinsures their book nationwide, wherever they're writing, like we talked about with treaty agreements, where the reinsurer can't say what risk they do and don't take. It's a national book of business. We reinsure the book for what it is and price according to risk. So, is there cross-state subsidization? That's not something that's really related to reinsurance. I think the primary carriers are going to speak, and I think they disagree with that as well. I mean, I wasn't long ago, I was at CNA and I was handling those arguments as well. And we vehemently disagreed with that. But from the reinsurance perspective, that's just, we reinsure the whole book. The exception to that would be a case like Florida, where they have all these companies domiciled there that are lightly capitalized, and they're heavily reliant on reinsurance. They're only in Florida, and they're heavily reliant on reinsurance. And so could a hurricane drive up the cost of reinsurance directly there? Yeah, it could.
You have another question, Representative Hughley?
Madam Chair, I just wanted to jump in and say that, sometimes carriers will decide that they are not going to play in a particular marketplace. And that's why we have that's why insurance is rated on is governed on state by state basis. Our state insurance commissioner's job is to make sure that we're not paying for California and somebody else, but and companies make decisions about marketplaces, and that's why we have to make sure that we have a good marketplace so that the rates would be reflective of that. That's your job.
Right. And we have actually seen some carriers pull out of a state if they've had too high of losses. So again, I just wanted to see, even inadvertently, if reinsurer rates go up, will it affect what our carriers have to pay for reinsurance, therefore affect the premiums? Representative Douglas?
Yes, yes. Thank you, Madam Chair. If you would be so kind to indulge me in this, insurance premiums over the rates and the cover limits. Do you have a graph of how that trend is going also?
Yeah. So
Based on your
yeah, again, I can give you a graph in the context of how reinsurance is used by primary companies, and the extent to which they're using it would influence the price of the primary carrier's price for policyholders. I can show you a graph of that.
Okay. Would that make the policy go up based on?
I'll show it to you.
Okay.
But my answer, I'm not being cute. The answer to me is no, and I'll show you why.
Okay. Thank you.
Okay. So again, sorry it's so small, this but you can see the the bar chart is pretty obvious. So this demonstrates the market share of homeowners multi-peril riders in Georgia. And what you see is that it's overwhelmingly low use of reinsurance. And so what that says is 92%, they retain 92% of their policies and only reinsure 8% of it. So reinsurance is 8 cents on the dollar. Okay. So we're not driving up the cost. And the contrary to that would be Florida. Florida companies that they don't have a lot of national carriers in Florida because like the chairwoman said, they kind of left because of all the claim activity, because it's a dangerous place to write insurance. So they have a lot of companies that just do insurance in Florida, and they are heavily reliant on reinsurance because they're lightly capitalized. They're not national carriers. And so that bar chart would look a lot more dark blue, and reinsurance would definitely be more part of their business program and drive up the cost. We would argue fairly because they're buying so much more of it. Does that answer your question?
Not rising because of this.
Understood. Understood.
Is it not true, Representative, that because of tort reform passing, our insurance premiums might be going down? Hadn't had a chance.
Absolutely not.
Is it not true?
Please continue.
Okay.
Sidebar.
So going back, yeah, in the interest of time, I mean, these charts are just showing, all of these bars. It's just taking a deeper dive into, who's writing it, and what percentage, but it's showing what was on the first slide of all those bars. So I'm gonna skip ahead a little bit. The main point I wanted to make was to show the property homeowners is they don't use a lot of reinsurance in Georgia. Let's see. Okay.
Thank you, Madam Chair. One more thing, you talked about the role of the federal government in the reinsurance market. If you will talk about that a little bit more, because with the changes that we're seeing, what effect is that going to have on their role?
Great question. So the way and I'm not an expert, I know there are some experts in the room, but the way I understand it is the federal crop insurance program works with insurers who are willing to write crop insurance in the state of Georgia by helping subsidize the premiums, the risk it would cost to write that policy. So they've got the subsidy from the federal government for that, and all the insurers getting that. And then also the insurer gets reinsurance, whether it's, remember those bar charts, 8%, 10%, 20%, however much they want to cede to the federal government, they can choose. And so I don't think that's I haven't heard anything where that's in danger of going away, or the subsidies or the reinsurance aspect of that. I think that's here. I think the larger concern on the federal issue is the data with budget cuts, or even getting rid of NOAA. The RAA's working hard to preserve the data, that data that we use to, look into the future and price and look to the past. It's just terabytes and terabytes of data. And if they get rid of this agency, NOAA, where is that all that data going to be housed? It's going to cost a lot of money, it costs a lot to maintain servers. I've had to learn a lot of this. That is news to me, but so it's finding the money. Does it go into an institute or a nonprofit? So if the NOAA does go away, we're hoping NOAA doesn't go away, because it's vital for the insurance industry to maintain that data. And it's not just the data; it's all the sensors and weather widgets and antennas and things out there that collect the data and aggregate it together. That's vital to the insurance industry. So that's really our main concern at this point. All right, keep the show on the road. All right. All right. Again, solutions to consider and avoid. So, we're big on mitigation programs. And with FEMA going away, federal funding drying up, this makes it more challenging. But any kind of state grant programs or revolving loan programs to improve community resiliency through infrastructure hardening are great. Alabama has a great program. North Carolina has a great roof program. Even Florida has a pretty good mitigation program too. And I can follow up with the committee and provide all these programs to you if you're interested in pursuing these. There's the biggest one is usually state grants for homes to construct fortified roofs. We work a lot with our friends at IIBHS, and they're doing great work finding solutions and creating standards to fortify your home. It's the Insurance Institute for Home and Business Safety. You've probably seen them on commercials or videos where they're, flooding a house or burning down a house or something and testing materials and to see how well they stand against fire, wind, and rain, all the plagues. But they're doing great stuff, and we're always promoting their work. Legal climate. Georgia's legal reform package will make the market more stable and predictable, attracting competition, lowering pricing. Nuclear verdicts drive up the cost of insurance for everyone else in the same insurance pool. Third-party litigation financing prolongs claims, increases the likelihood of a nuclear verdict. Venue shopping, taking a case to a more favorable jurisdiction for the plaintiff. These are all things insurers are looking at. I don't want to speak for them, but that reinsurers are watching too, because we're partners with the insurers, and legal climate matters. Things to avoid, state-run catastrophe reinsurance funds. I know there's been discussion about the healthcare reinsurance fund. I would advise against doing that with, we did it for health insurance. There's a discussion of, we did it with health insurance. Why can't we do it for wind, rain, or fire or whatever? And just real quick on that, I mean, the way the health works is that healthcare companies pay into the state-run reinsurance fund, and they pass along that expense to the policyholder. And if that healthcare company, whether it's a single policy, goes over a certain limit, can pull money and claw it back out of the fund, or in the aggregate with a number of claims goes over the limit, it can claw back money from that fund. So it's really a safety net for healthcare companies on the backs of the policyholders. The same would be true if it was for a hurricane or for wind or flood. So when states look to do this, we say you can do it, but it's only going to make things more expensive because it's on the back of the policyholders. So things to consider and things to avoid. So that wraps up my comments, and happy to take questions.
You do have a question from Representative Gamble?
Yes, thank you for the information. This has been helpful for me to hear your presentation. I had a question about the fortified comments that you made, because we did pass legislation. I think it was maybe 2 years ago now. It was a model. It has since become a model in-coil bill that incentivizes homeowners to construct to a fortified standard. And if they do, it doesn't force the insurers to provide them a discount, but it just basically says that they'll determine on their own what type of incentive to offer someone that might construct to that standard. You mentioned the roofs. Obviously, fortified construction is more than just roofs. Do you have any other thoughts on that, or can you elaborate about that a little bit more? And is there any thoughts that we should put some more teeth into the fortified construction incentives in our state as a way to benefit what we're talking about today?
Thank you for the question. That's a great question, and that's, again, a question maybe best suited for the primary carriers. I might punt this to the national trades for a future hearing, because that's more of whether they want to offer mandatory discounts or so on. That's not something I'm going to touch. but I think the program that you pass in the model bill at in-coil is outstanding, and whatever can be done to support it further, we fully support and would love to help out in a way that's helpful to you. So I'm happy to follow up with you and brainstorm on how we do that.
Thank you.
Do we have any other questions from? Yes. What's your number?
Is that okay? Thank you, Madam Chair, for allowing me. I'm sorry, I may have missed this. The traffic was terrible this morning, and I apologize for coming in late. Back to the very first. And I think from one of your first slides, I wanted to know who pays for the reinsurance. That's what I was asking Carolyn before. Okay, so it says that the basic insurance company that goes to the reinsurer pays the reinsurer, like that second tier and that third tier. How do they make their money? Who pays them to come in and take the risk?
Right. I think the best way I can answer that is to show you this chart. I mean, this is a chart of the market share of homeowners multi-peril in Georgia. This is your homeowners market, okay? And 92% of the insurance companies writing in Georgia, they retain 92% of their business and reinsure 8%. And so who's paying who's paying is that the insurance company is paying for them to cede 8%, and the insurers are paying for that.
Right, but then they pass it, that's included in what they're charging the homeowner.
8 cents on the dollar is charged to the homeowner. Yeah.
That's what I wanted to know. Thank you very much.
Okay, we have, I don't see any more questions at this moment. I really do appreciate this information and allowed this committee to really dig into the technicalities, what it takes to do reinsurance. And you're right, it is included in your premium. You don't see it, just like you don't see when they adjust the claim. You see the adjuster that's taking care of your business claim, but you don't see the what happens behind the scenes. Again, I thank you very much. This is great information. We may call on you again. We appreciate all that you've done. Now I'm going to turn it over to Representative Williams. Are you going to introduce our next speaker?
Sure, I'll be glad to. Thank you. Next speaker we have is a row crop farmer, and it's I'm kind of interested. I'm going to ask him when he comes up to the podium, who is his representative? He's out of Screven County, so that should give you a hint. And he has a lot of white hair.
Yes, sir. So John Burns will be my representative. I don't know if any of you know him, but representative and a good friend. And I won't say it here, but sometimes we claim to be a little bit thin, but don't tell everybody.
I wouldn't repeat that. But thank you, Ben. Look forward to your presentation.
Thank you for having me. And after all those, it's pretty technical presentation we just got, and mine will probably seem completely anecdotal now compared to that, and I apologize for that. But my name is Ben Boyd, and I'm from Screven County, and I'm a farmer, and that's all I've ever done my entire life. And what we do is convert sunshine and water into peanut butter and jelly sandwiches, and I hope y'all all can enjoy one. But that's what we do, and it takes a little bit of fighting to do that. So we're used to fighting, and we fight all kind of different things. But I'm just going to tell you about what happened in my little experience with the hurricane. And so if I bore you, tell me to be quiet. You won't hurt my feelings by any means. But I went to sleep that night just like everybody else. I thought the storm was going right up I-75, and I figured, well, and I got some good friends that live there. So my plan was I had everything ready to go. We got tractors and backhoes and loaders and bulldozers and chainsaws. So, our farm, we got some equipment, we got some help. And so I had some friends actually in Vienna and Camilla. And so I said, well, I'm going to call my buddies and see how they are, because the storm was tracking to go right through the middle of them, and I'm going to go help them. First, really, well, I was going to see Teal Warrington. That's who I was going to see. I was going to call him and see, because, I wanted to help somebody, and I felt good about myself. Man, I'm going to go help these people that need help. And we raised cattle as well. So I thought we'd check on livestock and then go help our neighbors. As it turns out, we need a little bit of help ourselves. It's a humbling experience. So my family farm, my grandmother moved to our farm in 1909 into about a 45-acre field and a 1,000-square-foot house. She moved there with her parents, her grandparents, and her 16 siblings in a 1,000-foot house. So I'm from the real deal. I'm the real world. I'm a real live farmer. And we're used to fighting things, but we're not used to fighting things in suits. So y'all just bear with me. But we woke up and it looked like a movie. I mean, it was terrible. Like, there were trees, everything was down. Obviously, we were without power since, way back, but that was no big deal. So I live on the coast. So Screven County, and I farm in Screven and Effingham County. As a matter of fact, I got a peanut field. It's probably not a half a mile from Mr. John's front door. So when we got there, we see hurricanes come off the coast all the time because we live right on the coast. No big deal for us. So we just one of those things, we call it a rain with a name. That's what we call hurricanes. But this was no regular rain. It was bad. And so when we got outside, we realized how bad it was. I mean, it was just devastation. It just ain't changed the landscape. Where we're from, there are lots of fields, but there are lots of trees. And, you can't just look and see some different places, but it looked like somebody went in there and just cut all the trees down. And it was really eye-opening and kind of sobering, you know. So at this point, we weren't worried about, you know, the money and the physical damage so much. You're worried about making sure your neighbors were alive. I mean, it was a serious deal. So the human part of it is real. So that's the first thing we did was check on people. You know, I live in a little Sylvania is the name of the town where my address is, but I actually live in Port Robin, and I'm 13 miles from a gallon of gas or a Coke. That's how far in the woods I live. So we check on our neighbors, you know, we always do, but especially in times like this, you know, our neighbors kind of work together, and we got together and checked on each other, and that was a good thing. But between fire stations, we had no way for people to get around. So there's 4 miles between 2 state routes, and they're volunteer fire stations on both ends. It was a big deal to get them around. So there are 47 trees, and I don't mean limbs, trees on those 4 miles of road. So we started out first thing in the morning, clearing these roads so we could get emergency people just to fix the immediate problems, you know, the human problems. But in the middle of doing this, you know, we understood we have livestock, you know, cows like fences. When fences are torn down, you have to go get them hemmed up. And that was a secondary problem, but it was a problem nonetheless. So we get all that up. And like I said, we kind of had the construction company ready to go to help our friends. As it turns out, we had to help our immediate friends, and it took quite a bit of time. And so not pretty much, all of our efforts and all of our focus turned on just trying to get everybody straight and make sure if anybody was hurt, we could get them out and get help. In the meantime, I probably should have told you this. I farmed my brother and my daddy, and I know you should say father, but I call him daddy, so I'm gonna call him that today too. So he's 80 years old, and he's driving a combine right now because I'm not there. And so my brother has 3 grown sons, and they farm with us as well. And he and my oldest nephew had just gotten married, and bought a small little house, a nice little house, and just got through renovating it. And they were going to live their first night. They were going to spend the first night in their new house, and they were all excited about it. And as it turns out, the storm was coming. They said, well, we just stay here until tomorrow night. That's a good thing they did, because the house was completely demolished. An oak tree that probably 3 times as big as one of those columns fell across the top, and the wind took it over. And so if they had stayed there, they probably wouldn't have been with us now. And so that really changes your perspective. And when the money part of it is a big deal, and right now it's huge, but that morning it really didn't matter. It really didn't. But as we got up, we started seeing more of the human needs we need, and the house was gone, and that was bad. So I just happened to have, and I should probably say this, I'm also on Georgia Farm Bureau's board of directors. So I know about that much about insurance. And so, you know, the house was down, and I was upset about it, but I assumed we get right. And the next morning after the storm, somebody showed up in a Farm Bureau truck, and they started taking pictures. And so I stopped and talked to them for about 10 minutes. I got on a chainsaw and started cleaning up the yard, and they left there about 45 minutes later with a check for the house. So I thought that's pretty good news from the insurance company. But we were without power for 9 days. And if you'd have told me on day one, when you'll be without power for 9 days, I could have planned better, but we didn't know that. So, you know, all of a sudden you got plenty of food, plenty of water, no big deal day one. And by day 2, everything in the freezer is eatable, but it's edible, but it's not eatable. And so by day 3, you know, things are we got neighbors that have generators, and don't worry about it, I got a generator, I'm good. And then about day 6, the generators ran out of gas, you know, propane. And so they couldn't get, the propane companies didn't have power and didn't have anything. So we got, and I might not look like it, but I'm a 2 shower a day kind of guy. I like 1 in the morning, 1 at night. You get 7 or 8 days without a shower. You know, I bathe with the cows, but that's just not the same. So we had a huge cleanup and a lot of erosion. So we had a bunch of dirt that moved, and that's not good. When fields erode, it takes a long time and a lot of money to get that dirt back up on top of the field. So I told you we've been in the same place since 1909. This is not the first hurricane, my storm, just, you know, that we've had in my farm. So if something had stood all those storms, you know, we kind of expected this a little bit. So if it was limbs down, you'd never hear a word from us. But this was serious. And so like I said, the Farm Bureau deal came in, paid for the house, and I was grateful. We didn't even look at anything besides that because we were too busy trying to take care of the immediate stuff. But in the meantime, we had a lot of equipment that was torn up from the storm, several structures that were really torn up bad. No carpenters to come back and fix them because there's still dozens of blue roofs in my neck of the woods right now because just, you know, finite workforce, and you can't get it all done. Then you can't pay for it. You know, it's just a lot of stuff going on. So I say all that to say I felt good about it because we take quite a bit of insurance. As a matter of fact, I fuss in my insurance agent all the time about how much premiums I pay because I feel like it's way too much. But on that morning, I was glad I wrote every check I'd ever written because I felt like I was covered. And I felt good. So we buy a lot of crop insurance as well. And it's almost to the point we can't hardly afford to pay for it. So you kind of make that distinction. How much do you pay and how much risk can you take? And we feel like I want just enough that I can stay solvent if I lose out. I don't want any other than that because I'm going to take a little bit of risk on my own. And so, man, I hate to say this because RMA, I say we fight stuff a lot, but I never fight people in suits, especially not the federal government. But RMA is the guys who make the rules up for crop insurance. And they came out with a new product a couple of years ago called hurricane insurance. And all you had to have was take a NOAA weather station and we got a tropical storm as well. So I'll talk about tropical storm, 40-mile-per-hour winds and 6 inches of rain. And it triggers for a payment. And I was really upset because I know my finances and I know my bankers and I know I had a lot of money in the field. Like that Kenny Rogers song, I had 2 hungry children and a crop in the field. I was in a mess. But I felt good because I'd bought that insurance and I said, well, it's going to pay off. But the way that thing works is you had to have a 40-mile-per-hour wind recorded by a NOAA weather station. I'll be honest with you, I don't have a wind recorder at 3 meters high that NOAA has, but we've been measuring rain for quite some time at my farm. And I think we got a handle on 6 inches of rain. So I know we had 6 inches of rain, but turns out all the weather stations got destroyed when the storm came in. So they couldn't track this weather. They said, don't worry, because we got it backed up in Asheville, North Carolina. Well, guess what happened in Asheville, North Carolina? Y'all all know the story. And thank the Lord they did. And I don't mean this lightly, but and I got a good buddy and Camilla, and they triggered. And I called him when, he called me. And so I checked on him. He said, man, it didn't even blow the lids off the trash cans. I said, well, good for you. I'm glad it didn't, but they triggered for the payment. And so there are 5 counties on the eastern side of the state: Scriven County, Effingham County, Evans County, Wayne County, and it's changed, but at one point in time, Pierce County was not included. And if you look at the map of where the storm came across, I mean, if you drew the map, those would be the counties that you would draw on the map. You know, y'all seen this devastation in Augusta. Burke County only got it because it's contiguous, and that backs up, to like where Augusta is. And so we just could not believe it. And so, but we didn't fuss because they said, wait, we'll review it. Just give us a minute, we'll review it. And so we didn't fuss. We were kind of quiet. Turns out, long story short, they wouldn't go back on it. They wouldn't go back and study. And so they used modeling. So they went back and they remodeled it, and the modeling showed that we didn't have 40-mile-per-hour winds. Maybe that's true. But I tell you what, we got some fragile trees in my neck of the woods because it looked like a bomb went off for 39-mile-an-hour wind, do that much damage. And so as we look back on it, I think surely some common sense should come into play at some point in this deal. But as it turns out, it didn't. And so I fussed as much as I could, and I probably shouldn't have fussed today because this probably is not the time or the place for it. But I told you all that to say this. We're still struggling in my neck of the woods, trying to get everything straight. And my new friend from Chicago, I just met him this morning. He said, well, what are we going to talk about? I said, well, I'm not exactly sure. And he said, well, if you don't know what's for dinner, it's probably you. So I don't know where we're going this morning, but that's my little story. And my name's Ben, and I'm from Port Robin. I'll be glad to answer any questions you got.
Thank you very much for your story because I've ridden through that area and it is still devastating. Do we have any questions for the gentleman? I don't see any. Thank you very much for sharing your story.
Yes, ma'am.
Our next speaker will be Amanda Walker. Are you ready? She's on Zoom.
Good morning. Can you hear me?
Yes, we can hear you. Thank you.
Okay. My name is Amanda Walker. I'm with Allison Ag Insurance. Thank you for having me this morning. My job is to help protect farmers like Mr. Boyd in events like this, and this was absolutely devastating, as he said. I'm from Coffee County, Georgia, which was hit very hard. We had over 100 miles an hour sustained winds clocked at the airport. It affected not just agriculture, but every single person in the county. The agriculture industry is hardest hit in my counties that I insure were timber, pecans, chicken houses, cotton, and tobacco. The timber was just destroyed. It does not have multi-pearl crop insurance, so those people took bottom dollar for their wood, and they're still cleaning that up. Pecans, they do have multi-pearl crop insurance. They were able to carry the hurricane product, which Mr. Boyd was talking about. And it did pay problems with the NOAA weather, in my opinion, that it missed out some counties, and those counties that he mentioned should have been paid. So that's a problem. The other industry is chicken houses, and Will may talk about that after me a little bit. They don't have multi-pearl, but they were destroyed. And cotton and tobacco. They were hit hard. We've had 3 major storms in the last 2 years. We've had Hurricane Idalia in 23, Tropical Storm Debbie in 24, and Helene in 24. And this has just been one after another hurting these industries in Georgia, especially the South. Any questions so far?
I don't have any questions for you yet.
Okay. There are products in place, revenue protection, hurricane products available through multi-pearl. Most farmers buy up on these. Like Mr. Boyd said, he has a very high premium. He was probably very glad he did in 24, but on a year where there's not hurricanes or disaster events, it's a very stout price for them to pay. However, when this does pay out in a disaster year, it offsets their losses from all the expenses they have in their crop, but it does not completely make up these losses. They are still in the hole. They are financially struggling. It's going to take more than crop insurance to get these Georgia farmers on their feet. I just am able to offer them a cushion, and there's things we can improve on crop insurance, in my opinion, which probably isn't for this meeting, but it definitely is a tool in their toolbox that they have to have. It's for their livelihood. Not only are they facing overcoming these disasters, they're facing low commodity prices, especially on cotton and corn. Mr. Boyd didn't touch on this, but it affected cattle. There's a lot of people who lost cattle. Every single thing has been affected, and the farmers need help.
I do have a question for you.
Okay.
Do you know how many, or do most farmers buy this protection and they have that already? And how about your homeowners and your businesses, particularly other industries? Were they covered for their property as well as storm damage?
So most farmers do buy these products. Some of them have operating loans and they're required by their banker, but I would say all farmers have crop insurance. Some have a more protection than others. Like, you don't have to have the hurricane product. It's a supplemental product on top of your regular insurance. But I would say 95% of my book of business takes the hurricane product on top of their regular crop insurance. As far as the homeowners, every single home in my county had substantial damage. I would say every single home in Coffee County needed a new roof, if not way more repair than that. My office had to have a new roof. My home had to have a new roof. We lost every tree in our yard. There's farmers that lost shelters. I know from the hurricane and from the snowstorm in January. Some of which I have heard were not covered. They did not have good coverage. And so they did take a loss on that and they've had to pay for that out of their pocket. I personally think my premiums have increased some from all of this, but I'm only a crop insurance agent. I do not write any other kind of insurance.
Representative Douglas?
Thank you, Madam Chair. I just had one question. Thank you for the story. I'm sorry about the plight that you're going through in your county. Do you anticipate this following year coming up, do you anticipate there being an increase in the policies that you're going to write for the following year coming up?
So we just wrote the 25 policies in February for the row crops, so to speak, cotton, corn, peanuts, soybeans, tobacco. And I think everybody did for 25 buy as much hurricane coverage as they could. You kind of have to put your eggs in multiple baskets because every year we're not going to have a hurricane. We could have something that causes a revenue loss on other cotton or something else. And in that case, you want to be protected too. You got to spread your risk in the supplemental products. But I do think that is where crop insurance is headed. I do see farmers buying the supplemental products such as hurricane, SCO stacks, those additional add-ons more and more. Yes.
But did the price increase from last year to this year?
So the price,
The same product that you're offering your clients?
the price is set by RMA. That has nothing to do with me. And I did not notice a price increase on that, no.
Thank you. We talked about the type of coverage, and my question has to do with, do they have an all-encompassing crop, any default for your crop, or do you have to buy individual coverage for hurricane, for floods, for a disease? How does that work?
So let's just use let's just say pecan trees, since they were damaged substantially by the hurricane. There's, it takes 8 to 10 years to get a new pecan orchard growing. So these people can buy 2 separate products. They can buy a product that covers their crop revenue loss. So if they had a revenue loss in their pecan tree operation, it would cover that. They can also buy a product that would cover the tree itself. So if the tree was uprooted and damaged so many on their orchard, it could be covered. They can also add hurricane to both of these products.
Okay, so if they had coverage but they didn't buy the hurricane or windstorm, it wouldn't have covered it at all.
It would not have. It would have covered if the hurricane blew the tree down. It would have covered some of that. But if they did not have hurricane coverage on that pecan tree policy, they did not get as much money as they could have.
Okay. Representative Hughley, you have a question?
Thank you, Madam Chair. Have you seen any difference in terms of what your clients are opting for this year as opposed to, after the storm, as opposed to what they had previously?
Well, they're all terrified because, frankly, for 2 years in a row, they've just been punched and punched and punched between the weather, between prices, between input prices. It's really been a perfect storm against them. And so, yes, my farmers have bought products. They're well protected as good as they can be with their crop insurance. So they're buying the products to protect themselves, but it's just, that's not enough to offset it when a disaster does happen.
So are you saying that each client, what they purchase is tailored just for them? There's no basic product? Is that what you're saying?
Well, there is a product guidelines for each crop. They have a choice between yield protection, revenue protection. RMA gives us all of the options that they have. And then we tailor it based on what their need is and their operation. The farmer may be concerned about if he grew corn this year, the corn price dropping. So instead of going for yield protection, he probably took revenue protection on his corn. So there's a base product for everybody to pick from on each crop, but then you can tailor it according to your needs, how you want to, between yield protection, revenue protection. We can add hurricane coverage. We don't have to add it, but we can, and so forth.
So one other question, is the on again, off again tariff situation affecting how they purchase or tailor their coverages? Or no?
Not that I'm aware of.
Thank you. I don't see any other questions. Does anybody have anything else they want to ask? Thank you very much. I think this has been very informative and very personal. You've brought it to us in a way that we can see how it has affected this whole industry. Thank you. Okay.
Batting cleanup for us today, it will be Will Wilson from Oak Bridge Insurance Company. Will, welcome.
Good morning. Thank y'all for having me. Like I said, my name is Will Wilson. I'm originally from Waycross, Georgia, big city, and have recently migrated in the past couple of years over to Savannah, Georgia. And so I'm one of the principals with Oak Bridge Insurance. We've got 30, 40 offices across the state of Georgia, likely one in one of your hometowns. Today, I'm here on behalf of the IIAG. We're the Independent Insurance Agents of Georgia. I also currently serve as the chair of the Commercial Lines Technical Committee for the Big I. For sake of clarity, what an independent insurance agent is, we represent the person that buys the insurance, and we help facilitate that transaction and help them navigate the various insurance carriers to try to strike the right balance of coverage and price and make sure they're protected the way they want to be protected. Today, we've spoken a lot about Hurricane Helene and the damage and impact that it had. One of the industries that I specialize in and represent a lot of clients in the state of Georgia is the timber industry. That goes across timber dealers, loggers, the log transportation, even up to sawmills and a lot of large landowners. We talk about crop insurance. And the farmers, even though the product may not bring them whole, there is somewhat of a cushion there. And that doesn't need to be messed with. Crop insurance is very important. I want to be clear about that. But the timber owners, there are no viable products in the marketplace now for insuring your stand of timber. There's been a couple of products through the years. Some of them would not cover pine beetle infestation. Some would have certain nuances to wind or hurricane, et cetera. And there would be very limited strip down coverage, and it was quite expensive. And so I remember September 26th going into September 27th, like it was yesterday, and talking to my clients all over Southeast Georgia and beyond, where we were just kind of reeling from the damage, figuring out what happened. And I had numerous clients that called after they were able to get drones out and do assessments that had in excess of $5, $10, $15, $20 million of timber laying on the dirt. They're trying to figure out how could they get it off the dirt and get it to a mill as quickly as possible. With everybody being affected, there was naturally a large influx, and the mills only had so much capacity, and so it immediately drove down the price. So a lot of these folks that had invested their money for over 30 years, because usually it's a process of 20 to 30 years before you can get a pine tree from seedling to the sawmill or seed to board, if you will. No coverage, nothing that they could rely upon to help that protect their investment. And so just some of the data points. I don't know if y'all saw the Hurricane Helene timber damage assessment that was done in partnership with the University of Georgia and the Georgia Forestry Commission. There was over $1.28 billion worth of impact that Hurricane Helene caused in the timber business. Over 8.9 million acres of timber affected by the storm. With respect to pine trees, there was over 26 million tons valued at over $730 million that were damaged. And on the hardwood damage, 31 million tons valued at over 560 million. And 88% of that land was owned by private individuals or private businesses. And so that industry has been punched in the gut from Helene. And so we have been working and trying to come up with a game plan with the Georgia Forestry Association and just in conversation, try to come up with a product. And so it's kind of fitting we have the reinsurance industry here today with us, is that we will rely heavily upon talking with reinsurance partners to help develop this and figure out a backstop, because insurance, one of the fundamental pillars of insurance is law of large numbers and spreading of risk. And so we talk about maybe not wanting California to impact Georgia, and virtually on 99% of the things about California, I hope they don't impact Georgia. But in the world of reinsurance, hopefully California and Georgia don't have events the same time every single year. And so from a reinsurance standpoint, sometimes it may be a benefit to where if Georgia experiences a catastrophic loss and other states where reinsurance is in play on some of the large national carriers, they can help offset and be a good neighbor to us in those times. So there's, a really macro level where reinsurance plays, and they don't necessarily make decisions purely that impact our state solely. And so I think that it's they're an important partner for our industry, and ultimately that feeds down to the consumers. And so they're a vital element of what we do day in and day out. Any questions?
Representative Williams.
Thank you, Madam Chairman. I had a question for you, Will. The state of Georgia, I thought we kicked in, was it $800 million for the pine tree industry, for the timber industry?
Yeah, I forget what the exact number was, but
Is that the number, 800? Okay. I mean, I know timber is the number one industry in the state of Georgia, and, we're going to do everything. But like you said, it takes 30 years once you plant a pine tree to harvest it. And then a lot of folks' whole retirements and everything else was just wiped away. But yeah, I was thinking it was 800 million, but thank you.
Representative Hughley.
Thank you, Madam Chair. Just to clarify, I want to make sure I heard you correctly, that with the timber industry, when the weather event happened and these trees are on the ground, they don't have any insurance, and their only option is trying to get as many of them up and milled as possible. And then that drove down the price because there was a flood in the market. Is that what you said?
absolutely.
Okay.
There have been no viable products in the past 2 to 3 years that have been available for purchase. And I've gone through this with several of my clients that own a tremendous amount of land, et cetera. And when we looked at it, and through the years, the cost that it would be for them to insure it, and the limited perils that it would insure against, whether it be fire or straight line wind, et cetera, it was just not feasible financially. And so there are most companies, unless they've got something that they're keeping a secret, or most landowners, unless they've got something they're keeping a secret, there's nothing available in the open marketplace to purchase.
And there are no models anywhere?
Models?
Yeah, I mean, some other state, some other country.
Yeah, no, this is something that we look at on a national level. I mean, most of the time, if there's an insurance product that is available on the West Coast, et cetera, for insuring the timber, those folks would naturally want to expand and come into different areas. And so we've not seen anything on a national level and or regional.
Representative Cooper.
What did that $800 million cover? Was it just cleanup, or what, to help them get trees up off the ground to market, or what? How was it used?
You want it?
I thought in the budget it was for the reimbursement to the ones who lost it, and then they had programs they were going through. in order to ascertain exactly who lost what, because sometimes people will say they lost a lot more than they did, but I think there were extension programs through the counties that were identifying the people, and they would go and apply for X amount of money. That was the best of my knowledge, but I'm not on appropriations. I'm just telling you what I read.
That's my understanding. It went through the local counties, and that's where it would be dispersed.
Okay, in other words, programs that might help them replant or
Right.
in a positive, in addition to they lost. Thank you very much.
Thank you.
Yeah, and I think there were multiple facets to the damage. I mean, you had one, the loss of value of the product that had been growing a long time. You had the cleanup, then you had the replant. So there were you look at the value of the timber as one thing, and what that $1.28 billion does not include is all the cleanup and all the other indirect losses that were sustained by their businesses and other businesses in general. So.
Okay, Representative Cooper.
I really appreciate the fact that you let me join in this morning. Thank you for letting me ask questions because I certainly learned a lot. I wish everybody could hear what you had to say today about what happened to you. I think it might help all of us in the legislature have a better understanding of what people go through trying to feed us. But do we have any accounting of how many people just threw up their hands and quit and said, I can't?
Actually, I'm making a list of questions to know, and that's one of them that's for future meetings to get that information.
Thank you very much, Madam Chair.
Thank you. Please continue. Do you have?
Well, I think that's about all I had. You know, we are actively working with all the stakeholders right now to try to, you know, develop some sort of a product because I think that the open market is probably the best place to try to create something. And so we are working with the various landowners and trying to come up with a game plan on that. So that's something that's active and we're working towards. So hopefully we can try to let the open market solve some of the problem or at least build somewhat of a cushion to protect them. But ultimately, if y'all are seeking to try to figure out a way to help create a state fund or something along those lines, we would certainly be willing to talk and interested to see where that goes with respect to the timber industry, because that is over a $40 billion industry for the state of Georgia. And I think we lead the rankings nationally in the timber business. And it's a vital part of our economy. And so we've got to come up with some sort of solution to help protect that critical piece to our economy.
Thank you very much. I would like to ask if there's anyone in the audience that would like to ask a question or offer some information. This is the time to do it. If you are interested in speaking, please come forward. Don't rush all at once. No, that's fine. And we did not anticipate that, but this has been wonderful information. I will tell you that the state is looking at ways to either facilitate or look for special risk pools for public-private to find out how we can help in these instances. We're seeing how big this picture is. This is not a little picture, and it does affect us in the whole state, even in these certain areas. But the criteria is to identify essential industries that are of strategic interest. Obviously, our food and timber are an important part of our economy, but it's an important part of life for the people of the state of Georgia. So we do want to look at this, and there are many industries I think that have been hurt, whether through premiums or I'll call it a loophole, something that is not covered. So these are things we will continue to look at. And at the end of our meetings, we'll have 2 more meetings. We hope to come up with some recommendations that we can help everyone that's been involved in these. If there are no other questions, we are adjourned. Thank you.
Members, it's getting set up right now.
Okay, we will tell you for the presenters and the committee, we have lunch in room
514.
514 down the hallway.
It's getting.
Thank you.
So.